Welcome to the Deepak Saini Show.
He said he gon' huff and puff and blow my mind up. You meet the island girl, she might dirty wine up.
Welcome to the Deepak Saini Show. I'd like to thank J23 for the intro music. You can find a link to her music in the show description. My guest today is Jessica Freeman. Over the past 20 years, Jessica has explored a variety of investing and tax strategies, which culminated in 2021 with an in-depth dive into the nuances and intricacies of crypto investing, including its various tax consequences. And Jessica is our first crypto expert guest, not the last for sure, but our first that we've had on the show. In 2022, she discovered that most people have no idea how to even begin preparing their crypto info for their income tax reports. She, since becoming crypto tax certified, is that a thing? I don't know. We'll find out. She's been working with beginning and advanced crypto investors to teach them how to save money, time, and frustration when filing their crypto tax reports. Her passion for teaching helps break down the complications of crypto taxes to a simple step-by-step formula that'll produce great results in a minimum amount of time while saving most investors from expensive accounting fees or hours of frustration trying to figure out on their own. Jessica, welcome to the show.
So nice to be here. Thanks for having me.
Yes, it's a pleasure. So I'm sure when you were a little girl growing up, you didn't think I'm going to help people with their crypto investing taxes, because crypto didn't exist then. So maybe just let's go a little bit, rewind a bit. And how did you fall into what you're doing now?
So it started a long time ago. It did actually start when my kids were little. I had trained them to take a nap, but the only way I could get them to take a nap was if I laid down with them. I could either spend hours trying to get them to take a nap by themselves and then get like 20 minutes to myself, or I could lay down with them, sneak a book behind my pillow and whip it out while they were sleeping. And I ended up reading half the library on alternative medicine, how to raise your kids, how to homeschool, all the crazy stuff, including investing. And I ended up by the time they outgrew naps and I started putting all this investing stuff that I learned about into practice, did pretty well with my investing, got curious about crypto way back in 2017, but didn't know how to get in because it sounded too complicated. So I ended up buying that grayscale Bitcoin trust that you might have heard about. And I've gone back and looked now. I managed to buy it when it peaked in 2017. And then the next year I was looking at all my investments, and I like to cull out my losers at the end of the year so I pay less in taxes, because if you have a loser, it offsets your winners 1-to-1. So I was looking for losers and I found the grayscale Bitcoin trust. Had done pretty miserably that year, so I sold it. Turns out I sold it the week it bottomed. So if you're looking for investment advice, I'm totally your girl. Buy at the high and sell at the total low, at least when it comes to crypto. But after that, in 2021, I did end up looking for something to do. I've been a piano teacher for most of my life, and I got tired of teaching the kids who don't practice, and got to the point where I would take my knitting into their lessons and I'd be like, yep, that was an F sharp. Yep, you missed the C, and got really bored. So I decided to start my own business right before COVID hit. My son designed the logo, and we named ourselves Beta Virtual Assistants, which stands for bookkeeping, editing, transcripts, and more. And we started this business, looked around, and we were going to do virtual bookkeeping for businesses, and found our first customer. The next week, everything shut down for COVID, and our customer no longer could be our customer. So looked around for things to do, found an affiliate program that was selling things, and was terrible at selling things for other people. But they ended up selling this crypto course. And in the crypto course, they taught us how to trade with bots and create thousands and thousands of transactions. And the whole time that I was learning how to do this crypto stuff, and I was really excited because finally I had the keys to the kingdom. I figured out how to get my money into crypto and how to spread it around and move it to wallets and do all kinds of crazy stuff. And the whole time, these people in this class were like, well, what about the taxes? What about the taxes? And they said, we're gonna help you figure out the taxes. We'll get an expert. So February 15th, 2022 comes around, and I'm driving my kid to his choir class or something like that, and I'm listening on my phone in the car, and they said they had this tax expert do this presentation, and they said, okay, you use this software, which I had already known about. but they had promised a discount. So I was like, okay, cool, use the software. And then they said, we'll give you a discount on the software if you buy our class on how to use it. And boy, oh boy, I got really mad because I could tell just from my investing experiences, and also I've self-taught myself how to be a bookkeeper for various nonprofit organizations. So I have this background, and I have creating investing courses for teenagers about all the different things that can happen with stock splits and dividend payments and all this sort of things. So I knew that I had the information I needed to do my own taxes. I didn't need their stupid course so I could get my discount on the software. So I poked around that night and figured out that the software actually has a corporate accounts program where you can kind of buy accounts in bulk and then use them, usually for tax professionals. And I was like, okay, I'm going to get 10 of my best friends and who all do crypto, and we're all going to buy this software. We're going to save money and we don't need that stupid course. And I only found one friend. So he was my blogging partner at the time. We were trying to write a blog about how parents like us with teenagers and who wanted to get into crypto and how to be safe and all this sort of thing. We were trying to figure out how to sell this crypto trading program to other people. We weren't very good at that, but we got together that night and figured out maybe there were other people who needed help with their taxes. So we ended up buying that corporate account. And then in the next 2 weeks, we created all the sales pages. We created all the emails. We started creating tutorials. A week later, we had our first customer. And a week later, she was done with processing her taxes. And so since then, we've been helping people figure out how to fill out their taxes. And we figured out eventually that people don't want to do it themselves. So we have the do-it-yourself option, and we provide Q&A calls and Slack groups, and you can ask lots of questions if you get stuck. And we now provide the software as part of the membership, and so all do it yourself. Or we now have the done for you services where you connect your accounts and get your data into the software, and then we clean up everything for you, make sure it's telling the right story. And that's what we've been really focused on ever since. So
Awesome. Very very unique and interesting journey for sure.
yeah.
For sure.
Yeah.
So the time of this recording, regardless, well, I think for most of the world, definitely the US and Canada, tax filing is over now. So
Yeah.
and some people might be listening here, when this gets released, and they're like, oh, I wish I would have known, or I didn't know, and that took way too long, and et cetera, et cetera. So what are maybe some of for those people, for looking ahead to next year, what are some of the common crypto tax myths or misunderstandings that you see all the time?
Yeah, the number one thing is that people don't think they need to report. So they'll either think that they can hide it from the government and the government doesn't need to know, or they'll look at especially over the last 2 years, they'll look at all their losses and they'll say, oh my gosh, it's embarrassing. It's not worth reporting. And I want to make sure that those people know that actually those losses are going to come in really as a big help in the upcoming bull market, because the losses, as I said earlier, offset gains 1-to-1. So if you have, I've seen people, we've done a few clients who have hundreds of thousands of dollars of losses, and they're actually kind of happy about it because they know that they've been buying Bitcoin, and they know that if Bitcoin goes up to $100,000 or whatever, when they sell that Bitcoin, they're going to owe all these taxes. But if they have those losses sitting there that are rolling forward, especially for US customers, you only get to count 1-to-1 your losses, and then $3,000 in addition past that. And then the rest of it rolls forward. So if you have $10,000 of losses this year and you have nothing else to offset it, you can count 3,000 against this year's income and then roll the other 7,000 losses to next year. But you can't do that if you never reported it. So that's
right.
the first thing is you got to report your losses. You got to make sure that you've optimized it and claimed all the possible losses. And another thing is you just want to make sure that your crypto is telling the right story. So you want to have if you bought crypto, there's so many crypto tax softwares out there that you plug in your numbers and you push a button and it runs the report. And then you realize later that it didn't know where something came from. And if the crypto software gets confused and it doesn't know where something came from, it loses your cost basis, which means you're paying 100% gains when you sell that asset. So if you have For instance, people who bought Bitcoin when it was 60,000 and then it crashed down to 30,000. But let's say they moved it to another exchange, the tax software gets confused and doesn't realize it. So they sell the Bitcoin for 30,000 and the tax, they know they bought it at 60,000, they sold it for 30,000. They've got $30,000 loss to carry forward. But the tax software didn't realize that it was actually purchased. So it treats it as having no cost basis. Suddenly you have a $30,000 gain, which I did the math on is like a $15,000 difference in taxes, depending on your tax bracket. So making sure that the trail of your crypto journey is like making sense is really important. And part of that happens during the off season is like when you do something with your crypto, you want to write down like I call them the weird things. Like if you open a new wallet, if you open a new exchange, if you start a new protocol that's weird, or your friend tells you about this cool thing over here and you send money and then it disappears and things like that, to write that down during the year so that you don't have to remember all of it later when you're trying to do your
Yeah,
taxes.
Jessica, couple things come up to mind right away. Number one, I think, I would say work with professionals, because different, like even some of the what you just said there about the 3,000, like I think that's different in Canada than in the US and probably in
Yes.
Australia and UK, whatever. So know your local tax rules or work with someone
Right.
for sure. The other thing I would say, let's put aside, how each coin is classified from the government's point of view. Let's put that aside for a second, right? But
Right.
essentially, what I'm hearing is that how you want to handle your crypto losses and gains is just like you would your stocks, right?
Absolutely.
I would think of it the exact same way, and I'll say that same even from a stock point of view. I this platform has lower fees, so I'm going to move my money over. The same thing happens. Like, what's the cost base? You have to track it yourself. They don't know.
Right.
They only know when it comes in, and then they give you your year-end tax sheet or whatever. And I'm looking at mine right now on my desk because I haven't filed them away yet. And it's like they don't know. They just know when it came into that firm, not what you originally bought. So you really have to track things for sure on your own.
Absolutely. Yeah.
So as you know, because we've talked many times before, and as some of the audience knows, I used to be a CPA, and I did a little bit of taxes in my time. That wasn't my primary thing. But what do accountants not know about crypto taxes?
Oh my gosh. I'm actually preparing a workshop soon that I'm probably going to charge money to, because I'm calling it 10 things that your accountants don't know about crypto taxes. And just some of them is just, accountants are really good at processing the taxes and understanding what they already know and what they've been trained in and all the normal stuff. But the crypto stuff is so new that unless they're doing some kind of educational training about how it works, they're not going to know when you send your money out to a protocol and it comes back sometimes as staking interest, or sometimes it comes back as a return of capital and all that sort of thing. They're going to have to research all of that. They're not quite going to understand. And you're going to have to explain to them what you did exactly in some kind of language that they're going to understand how to process it on your taxes for you. That's like the biggest thing that the accountants don't know. But yeah, and if you happen to, oh, I don't know, I have so many clients who have misplaced a wallet, and I'll be doing their taxes and I'll say, where did this transaction come from? And they won't know. But I am really good at blockchain research, and it happens to be on the blockchain. So I can go look and I could say, it comes from this wallet. These other things come from this wallet. Is this possibly a wallet related to you? And then they can find crypto that they didn't know they had or forgot about. And definitely, I think an accountant is probably not going to be able to do that kind of blockchain research and all that to help you figure out exactly what happened to all of your crypto.
Yeah, and I mean, a couple of things I'll say there. Like one, I'm a number of years removed from that, right? Of working as an accountant. But at least when I was still around, like people were barely talking about blockchain, let alone crypto and taxes. So I mean, it's probably changed. I'm sure there's courses and continuing education. I don't know because I'm not in that world anymore. But I would say I don't want to generalize. There's probably some generational thing too, where the older, more established 40 years into their career accounts are probably not bothering with this.
Right?
That's what I'd say. And then I think the other thing too is your average H&R Block tax preparer, or and there's nothing wrong with those people. I'm not trying to badmouth anyone, or just the person who does a general sort of bookkeeping, prepare your taxes things. They don't have the time like what Jessica just described to like get in research and hey, like follow the blockchain. Like they're not being trained in this, or they're taking the time. I don't know for a fact, but I would bet 99% on that.
Right. And with the rules right now being so unclear, so many countries are still working on defining how crypto is treated in taxes and all this sort of thing. So many of them are just like praying that they don't have a client turn up with crypto that is more than, I mean, if you bought crypto in Coinbase and Coinbase sends you a statement at the end of the year, that's, any accountant can add that to your taxes. But once you start getting complicated, I think I have had clients come to us because they've been turned away by their accountants who just didn't want to deal with crypto.
Yeah, absolutely. Why is organizing your crypto important for people who maybe don't even file taxes otherwise because of whatever reason, but let's say the most common being like their income is below the filing threshold or taxable income threshold or what have you?
Well, and we have friends who are actually digital nomads. They actually travel the world and they aren't currently residents of any country and therefore they're not paying taxes. But they're still using the software that we recommend and keeping track of their crypto, because the thing about organizing your crypto is then you know where it is and you know what to do with it. So the software that we use and recommend is great because it has all these reports on gains and losses, which is good for taxes, but it's also like, if you're curious, like if I sold 0.2 of my Bitcoin right now, what does that look like? Like what bragging rights do I have? How much did I make if I sold that? And the software that we have has a little calculator. They have various reports where you can see where all your crypto is. And like I mentioned, the people who lose their wallets and don't know that they left crypto over here or there, we've had people like discover crypto that way. And in another case, like I was working with someone last week, we were running a tax challenge where we give you access to the software and the tutorials for a week, and you have a week to try to finish your taxes, which is great for people with small accounts. And then if you need to extend it, we have, various, our do-it-yourself package or our done-for-you packages you can upgrade to. But this person was working on, it's called an LP token. So it's this crazy thing in DeFi where you take two tokens, you turn them into another token, and then you send that token somewhere and you get paid some income while that token is sitting somewhere, and other people actually borrow from that token. It's very complicated. But then eventually your token comes back and you break the token apart into your two original things, more or less. And there's this whole sequence of things that you need to make sure your tax software is aware of and telling the right story. But what was interesting for her is she was like, oh yeah, I did this thing and somebody was walking me through it and they showed me how to do this and this is how it works. And I was like, yeah, it's okay. I know how LP tokens work. And so I looked at her transactions and I said, okay, yep, here's where you created the LP token. Here's where you sent it out. Here's where you came it back. And then I said, but you didn't break it apart. You didn't cash out of your LP token. And she was like, I didn't. I'm like, no. So we went on the blockchain together and looked at her wallet address. And sure enough, there's her LP token sitting there. So there's money that probably shouldn't be sitting in an LP token that she didn't realize she had, that needs to cash out to more legitimate tokens that, stable coins or Bitcoin or Ethereum seems a little safer to leave your money in rather than an LP token. So
what I'm hearing, Jessica, as well, is like not only the software you use or working with you, it's not only just filing your taxes, it's also a bit of a managing your accounts and even potentially,
exactly,
depending on how much you have and what your purpose is, even like cash flow management as well.
And tax planning, if you are one of those responsible citizens who wants to report this right amount. If you're like me, at the end, actually a couple times a year, every year, I look at all of my stock holdings and I say, okay, I'm doing pretty well this year, but I have some losers over here. So I need to sell these so I can offset this so I pay less in taxes. And if you have that already in your crypto tax software, so you can just go and look and say, aha, this token I could sell at a profit right now, this token I can sell at a loss, and manage your tax planning that way is also, I think, important and helpful.
I love that you said that, whether you're talking about crypto or just your stock portfolio, don't leave it to December to like offset and do your tax planning for that year. Like prudent
Right.
to kind of have an idea throughout the year. So I love that you mentioned that as well. What is what besides what we've already discussed, what is like one like mistake you see people make with maybe not necessarily their taxes, crypto taxes per se, but just crypto in general?
Oh my gosh, the biggest mistake I ever saw. I met this woman shortly after we were still trying to figure out how to process the taxes. And, they say be one step ahead of your customer. And at that point, we really literally were like one step ahead of our customers. And so we weren't offering done for you yet. We hadn't learned all the stuff we've learned in the last 2 years. And this woman came to me and she had bought crypto. She bought Bitcoin twice in 2021 and she sold it twice at the peak. There was like two peaks in the spring of 2021 where Bitcoin reached a high, and she managed to buy Bitcoin, sell 100%, and then buy Bitcoin again, sell it 100%, made some ridiculous amount, like $160,000 worth of gains in Bitcoin, which is like crazy cool. And then she took it all and she put it into one coin, which crashed. And you've probably heard of it. It's called Ripple, XRP. And about that time, there was a court case that came against them, and the coin has crashed. It hasn't recovered. And by the time I met her, she had lost twice as much as she had earned in Bitcoin gains. She had lost twice as much in her Ripple losses, but they were paper losses. They hadn't been cashed out at all. And last year, I actually put together a workshop about this. I went into the math and I was like, if she had closed out, if she had been looking ahead and closed out some of that Ripple to just offset her Bitcoin gains so that she could not pay the huge bill, the tax bill that she was going to owe on all those gains. If she had sold some of her Ripple and realized those losses, she would have not only lost even more money because Ripple continued to fall, but she also would have not owned like gains on $160,000. So when I worked with her, there was nothing I could do to manipulate that in any way to save her from this huge tax bill she had, even though she was sitting on twice as much in losses. You can't take your losses and go back. You can only take your losses forward. And so that was just like the moment when I realized that people really need to understand the tax planning aspects, that if you're having a good year, sell something at a loss to offset it. And if you're having a bad year, take advantage of it so that you can use it in the future. Yeah.
Yeah. I guess another way to look at it too is if you're having a good year, look at assuming you have losses from previous years, like maybe sell those things to use up some of those losses that you have accumulated from previous years.
Absolutely.
That's
And
another aspect of that.
yeah, crypto right now, at least in the United States, we have this thing called a wash rule where you can't sell something at a loss and buy it right back
Right.
and count the losses on your taxes. But crypto actually doesn't have that rule applying to it right now. They keep threatening to bring it in, but it doesn't. So like I went to we haven't talked about this, but I did get crypto tax certified. I attended a crypto tax summit. And at the end of the summit, they gave us this test. You could pay money to take this test and be quizzed on all the topics they talked about. And I passed. So I am crypto tax certified by this summit group. But in any case, and at that crypto tax summit, they were saying over and over again, and these were lawyers and accountants putting on this summit, and they said, if Bitcoin's crashing right now, sell it and then buy it back 5 minutes later. It doesn't matter, but use those losses. Like if you had bought Bitcoin at 60,000 and it crashed down to 30,000, cash out, use those losses to offset future gains, and then buy right back in because you believe it's going to be the future or whatever.
Here's like, as we come to a close here slowly, Jessica, here's a question that just popped in my mind. And again, everyone check your own local regulations. So Jessica will probably be speaking about the US. Can you offset your gains or losses on crypto versus the rest of your capital gain portfolio?
Yeah, exactly. Crypto, especially in the United States, offsets directly any capital gains. So if you have stocks and bonds and all that stuff and they're doing well and your crypto's doing poorly, you can sell your crypto and use those losses to offset your other portfolio. They don't offset your normal income, except for that $3,000 that I mentioned for US taxpayers. You can use 3,000 extra losses to offset your regular income. It doesn't offset like rental income and things like that, but it does capital gains.
Okay, great to know. Great to know. So, fantastic, fascinating topic, for sure. Absolutely, we could go on and on, but about my own crypto experience, but we'll save that for another time. And this is not, a health podcast, right? As everyone knows, but I do like to ask my guests, like, what does your morning routine look like?
Oh, I have a terrible morning routine. I love to lie in bed with my cats and whip out my computer and start working on people's taxes. But when I am being good, I do go downstairs and I usually have either a tea with ginger, turmeric, and garlic and lemon juice. It's supposed to be really good for you. And I tend to not get like flus and colds and things like that. So I either do that or I do a vegetable smoothie in the morning. And if I'm really good, I'll actually exercise and move my body also. So yeah.
All right. What is what's one thing that you would go back and tell your younger self? Could be about crypto or investing or just health or anything. What's one thing you'd love to go back and tell your younger self?
Man, if I knew where Bitcoin was going, I definitely would have bought some Bitcoin earlier and held on. Yeah. Or even like I think in 2022 it was crashing down to 16,000 and I thought, "Oh, it's going to keep going." And I didn't buy Bitcoin and now I'm mad because I'm like, "Darn it. Now it's 60,000 and I never bought my one Bitcoin." So, yeah.
I'll just share this. I don't think I've shared this before, or to you, or on this podcast. I've certainly mentioned to other people before. I knew, I was kind of researching blockchain, and I knew about Bitcoin in 2017, but at that time was like, and I was still working corporately. It's just kind of right around at the time of me transitioning, or just before transitioning to what I do now. But I didn't know how to, like, how could you actually buy it? Like, that wasn't
Right.
clear, especially up here in Canada. So I like to say, like, I wish I was in that space, but I also know myself, at least, you know going back to prior to 2 years ago, if I would have had a big run, which obviously Bitcoin did, I probably would have just sold it anyway at that point, and took my like
Right.
50% gain or even my 100% gain or whatever. I've been like, oh my god, this is too good to be true, and I would have got out. I wouldn't be still holding it because I didn't have
Right.
the right mindset. But yeah, I was researching, and I went to talks and read books specifically on blockchain, but Bitcoin came up, and missed the boat there too. But I mean, I do have some now in my wallet here, but um, you do have a gift for the listeners. A crypto tax matrix is a little mini course. Can you just briefly describe what that is?
Yeah, we figured out that people don't know when they need to report taxes and they don't know if they need help. So we decided to answer those two questions in this mini course. You take the little mini course, it tells you a little bit about the complications so you can recognize yourself in either you're the simple version and you don't really need help, or maybe you don't even need to file yet. You're just like starting your journey. Or if you're on the complicated end of things, it takes you through that. So then you have an idea of, do I need to seek out more help? Do I need a crypto tax software? And what are my next steps to organizing and preparing my crypto taxes?
Awesome. So we'll have the link to that in the show notes, as well as all the other links to get a hold of Jessica if you want to like learn more about her and what her company does and all that sort of thing. If there was one last word of wisdom or golden nugget, Jessica, what would you share with the audience?
Don't put all your coins in one, especially in one crappy crypto. Just don't do it.
That sounds prudent for like most things in life. Don't put everything into one thing.
One
Uh,
basket. Yeah.
Awesome, awesome. So I would just remind you, don't forget to check out today's show sponsor. And as we wrap up here, I just want to thank Jessica again for being a guest on the Deepak Saini show.
And thank you for having me.
Awesome. It's been a pleasure. And I'm just going to throw it back to J23, who's going to guide us out with some music. And again, thanks for listening to the Deepak Saini Show. Exceptional results for the exceptional you. Till next time, everyone. This episode is brought to you by Optimizers Magnesium Breakthrough. This is a product I've been using and our family's been using for Gosh, 4 years already. What I love about it, it has 7 different forms of magnesium in it, all the forms that your body needs for all 400 processes that your body needs magnesium for. Most magnesium supplements have one form and usually a crummy form of magnesium. This has all 7 forms that your body needs. So click the link and get at least 10% off. Sometimes there's specials and you even get more. So check out Bioptimizer's Magnesium Breakthrough.
Podcast produced by the Minted Green Company,